Hi folks, a very good evening to all of you. We thank you and welcome you to this spaces of JST Investments. Tonight we are going to talk about the results roundup. We're going to talk about buy now pay later, which has been a really hot theme in the recent times. And finally, we are going to talk about the Mobikwik IPO. So today I have with me our CIO Aditya Shah, and I am Aditya Kondawar, and I handle ops and marketing for JST. So, without any further ado, over to you, AS. Why don't you tell us about the results of HDFC Bank, L&T Infotech, L&T Technology Services, ICICI Prudential, and lastly, ICICI Securities?
Okay, so guys, since we had not taken up the results that were there that came up during the last week, so first we will go ahead with the top result on the index as well as in the market. HDFC Bank. HDFC Bank reported a stable set of numbers, nothing to uh, get excited about or nothing to complain about. It was just a transition quarter where asset quality continues to stabilize for the company. Asset quality will start to stabilize across the financial services sector because last 3 months there was no lockdown. If there's no lockdown, collections every company will report robust collections that are out there. A lot of indicators for HDFC Bank continue to exceed the pre-COVID levels that are there. So overall, the management guided for very strong growth over the next 1.5 year, where the rural and the MSME and the SME business will do really, really well. So the point is, it's a transition quarter for the company. The retail growth, which had slipped over the last 3 quarters, has started to come back now. They have started to report a double-digit retail growth that is there, and in the coming quarters, the retail growth should be very, very strong. Coupled with the fact that this quarter we will have the festive season that is out there, and the festive streets is supposed to be the biggest ever festive street in the history of HDFC Bank. So on the banking and financial services sector, HDFC Bank reported numbers, and the numbers were very, very strong. Then let's come on to the mid cap IT results that came in. L&T Infotech results came in. They were really very strong. Constant currency growth of 12, nearly about 12%. Margins, the company was able to maintain the margins that are out there. And again, attrition remains a very big challenge for all IT companies that are out there. Similarly, L&T Infotech also reported high attrition that is out there. Together with the fact that demand is very, very strong, hiring talent remains a near-term challenge for all IT companies that is there. The total deal wins continue to be very, very strong, and strong traction over the next 2.5 years is expected for the company. Then we come on to the results that have come out today. On the results that have come out today, the first IT company which reported, mid-cap IT company which reported result was L&T Technology Services. L&T Technology Services is back. After struggling for nearly about 1.5, 2 years, the company's momentum continues to be very, very strong. The company has upgraded its growth guidance. The company's margins have recovered 410 basis points this quarter, which has also given out special dividends that is out there. And the deal wins continue to be very, very strong. The healthcare sector has started to pick up for the company and should not be a problem. So in the near term, very strong results that have been posted when compared to the last 2 years. However, the stock valuation is already pricing in a lot. It is pricing a lot, and therefore you need to be very, very careful when you go into this stock that is there. And that was L&T Technology Services, LTTS. Then let's get on to ICICI Group. Again, very strong numbers from the company. As in a normal stock, we look at the PE and the EPS that is there. Here we look at value of new business that is out there, and the margins, value of new business margin that is out there, and what is the premium growth that is there. Again, the company reported very strong premium growth that is there. The value of new business is touching 27-28%, which is very, very high and is amongst the industry leaders that is out there. The company has returned to profitability after taking a severe dent because of the COVID-19 crisis and the claims that they had to pay off. The term protection, pure play term protection, which is the most profitable business for the company, continues to grow robustly at 20.6%. So overall, it is amongst the cheapest stock, life insurance stock that is there, and strong numbers have been reported from ICICI Group. Let's come on to ICICI Securities. Again, as we have seen, a lot of momentum is there inside the market. The company reported highest ever customer addition in its history. That is the first point that is out there. Revenue growth was so 26%. It was stable, nothing to complain about. And across all businesses fired on all cylinders that is out there. And in fact, company gave a interim dividend also. So stable results, nothing to complain about as such on ICICI Group. Uh, then let's come on to our specialty chemicals company, Naveen Fluorine, where the company disappointed to some extent. The revenue just grew by 5 to 6%. The margins have come down to 27%, which we will see across specialty chemicals and FMCG space. Some companies will be able to pass on the input raw material inflation to customers. Some will not be able to. Margins will get hit for across all companies, I would say. Therefore, the profit has fallen for the company from 91 crores to 80 crores, that is there. One thing needs to be kept in mind for specialty chemicals company, the valuations have doubled or tripled in some cases across the last 1.5 year. And whenever you see results, it does not give any confidence. Uh, these companies have good long-term potential. However, the valuations are pricing too much at this stage, right? Uh, that is on the that is on uh, Naveen Fluorine that is out there. Okay, why don't you take on HUL and Nestle? What happened there?
Sure. Thank you, AS. So we'll move on to HUL first. The leader of the FMCG pack is the biggest company out there. So HUL saw a revenue growth of 11%, and the domestic volume growth actually disappointed with just 4%. So interestingly, if you look at HUL's 2-year volume growth, right, 2-year CAGR basis, the volume growth has been just 2.5%. So, I mean, this really would come as a surprise given the valuations that the whole FMCG pack is trading at. Also, the company saw a lot of raw material inflation, but the company being a leader and the biggest company, they were able to pass on a lot of price increases to consumers. So the margins were stable this quarter. Of course, they saw a good growth in the soap portfolio. Their home care portfolio did well. Their hygiene portfolio did bad on a high base. So what is really happening is that the hygiene portfolio is starting to taper off for a lot of FMCG companies. The kind of additional demand that we saw during the COVID period is starting to taper off as it is seen now. Foods and refreshment also grew, albeit on a low base. The company's commentary on the con call was extremely strong. They said that the GSK consumer business that they acquired, the nutrition business that they had planned, the synergies that were expected to come in year three has started coming in year one itself. Of course, like just like previous quarter, the company spoke about raw material inflation, crude packaging, other raw materials that the company uses for its various products is seeing a steep inflation. At the same time, we have all seen that the freight rates are also up multifold, and by freight I specifically mean the ocean freights. So there is a container shortage. Then there is the rates that have gone up. So all of this is really affecting the company to a certain extent. Like I said, the company being a leader, they were able to pass on a lot of price hikes to the consumer. Overall, a stable set from HUL. I mean, it does seem that the volume growths have started reverting to the mean, and let's see how the company performs going ahead. Coming to Nestle India, again a stable set. Revenue was up 10%, net profit up just 5%. Margins were stable. The company also announced a second interim dividend of 110 rupees per share. So the company hasn't given a lot of information, but yeah, they just spoke that the company's exports did well. the organized trade has started picking up with the economy opening up, and of course, like all other FMCG companies, e-commerce has been really good for the company as well. That's about it. Again, by Nestle India, they have a bullish outlook on the raw material prices. So for Nestle, it's wheat, coffee, edible oils that they use, and of course, packaging materials. So just like HUL, they said that these input prices are expected to be on an upward trend. That's about it, AS, from my side. So why don't you take over and talk about buy now, pay later?
Yeah. So one of the interesting concepts that has come over the last 1.5, 2 years across the financial services industry and especially in lending is a concept called buy now, pay later. So what does it really mean? At the point of sales, when you go ahead and want to buy something, for example, a mobile phone or a consumer discretionary product that is there, uh, you can either do that through a credit card that is out there, or there's a new service that has now come up which is called buy now, pay later. So what really essentially happens here is that you buy the product today, and then you don't pay right now, but over a period of next 15 to 30 days, as per the terms and conditions of the contract, you have the ability to pay down. Or some people also offer the fact that you can pay back through a EMI of 4 months or 6 months. So basically, what really this means is that you are not paying for the product that you are buying now, but you will pay at a later stage. That later stage can be 30 days or 1 month or 2 months or in some cases 6 months as well. Right. So this is a concept that has been aced in the United States, in the European countries, and a lot of South countries as well, such as Australia and New Zealand as well. The scope for this product uh, is very, very big. The market size is growing at a CAGR of 38% that is out there. Many fintechs are trying to capture a lot of financial services space through this model that is out there. We have people like Amazon Pay. We have people like uh, Simple, Lazy Pay, Flexi Pay, who are trying to do this. Uh, it's a good concept. It's a unique concept where lenders will try to push a lot of OEM products that are out there. Lenders will try to push a lot of credit that is out there. It is the next stage of giving credit to people who are really derived of credit. Uh, because not everybody will get a credit card from a bank. So, from that point of view, it is a very good concept that is out there. It will have ease of access for a lot of people. However, there are near term challenges that are there for a lot of these fintech companies. Uh, Fintechs are great. Fintechs is a very good term that is out there. However, in India, banking is a regulated space. It is an over-regulated space to some extent from the Reserve Bank of India. So these fintechs will never be able to get deposits. These fintechs will never be able to get money to lend. Therefore, they will always have to depend on a bank that is out there. The second point is that the structure of this buy now, pay later is such that it is a payment and it is not a credit that is out there. Once this happens, a lot of reporting to the credit bureaus does not happen, and people try to break all sorts of rules that are out there. So, therefore, it again becomes really very difficult to understand what sort of underwriting these lenders are really doing. That is the second part of it. The third part of it is that right now, what is really happening is that buy now, pay later is available on a very low ticket size, where the NPAs are anywhere between 4 to 12% that is out there, which is again really, really very high. Given the small ticket size, an NPA of 4 to 12% is not small. However, as the ticket sizes will rise, the NPAs will also definitely rise. That is the third part of it that is out. The fourth part of it is loss given default will be very, very high in case there is a default that happens from the client point of view. That is it. And again, the fifth thing is that as LGD becomes more and more popularized in the country, RBI will come and start regulating it. Right now, there are no rules as such which regulate buy now, pay later. However, however, RBI does not leave any stone unturned if the product becomes really big and it starts to hide, mask the NPAs that are out there. So, what are the two kinds of models that are there in buy now, pay later? One model is followed by Bajaj Finance. So, what is that model? That model is that they will tie up with the OEMs and together with the OEMs, they will try to push the sales that are out there. They will charge the OEM for pushing the sales, and they will charge the client for uh, giving them the facility of pay later. In such a scenario, Bajaj Finance makes money from both the client as well as the OEM. However, the credit risk sits on the books of Bajaj Finance. Bajaj Finance, in case there will be an NPA, Bajaj Finance will take the first hit on that NPA that is out there. The second model is followed by someone known as Pine Labs. What is Pine Labs? So if you would have gone, increasingly, if you would have gone and bought something on your HDFC Bank card, you would have to swipe on something known as a Pine Labs POS. So what does Pine Labs really do? Pine Labs is just a facilitator of a buy now, pay later. Uh, what really happens is the customer is a HDFC Bank customer where the underwriting has been done by HDFC Bank. HDFC Bank has identified that this customer is credit worthy. Uh, Everything has been done by HDFC Bank. Just the buy now, pay later mechanism is facilitated by Pine Labs. All the credit risk sits on the books of HDFC Bank and and Pine Labs, the buy now pay later facilitator, makes only a small fee. So there are two models that are out there on on the uh, on the lenders who take credit risk on their books, they will make huge hefty fees as Bajaj Finance is making. Or on the lenders who do co-lending with the banks that are out there, they take lesser credit risk on their books and therefore make lower fees that are out there. So who's going to win on the buy now pay later model that is out there? Both fintechs and banks will win. In this country, nothing can happen without banks. Banks are partners for everything. You look at Google Pay, if they want to transfer money, you have to use the back office networks of banks. You want to make deposits using Google Pay, you have to use banks. For example, Equitas is offering deposits on the banking platform that is in. You want to do buy now pay later, for example, with Pine Labs, you do with HDFC Bank. So here, both of these guys will be a winner. Of course, during buy now, pay later, a lot of these fintechs will also blow up because of the NPA problems, NPA costs that are there, which they will not be able to sustain. However, in the long term, somebody will do really, really well. Together with the banks, all of the sector will do well. It is just a challenge to find out who are the ones who will do really, really. But it is a very good concept and it is a win-win for both banks and uh, fintechs that is out there. Okay, can you go ahead and do the Mobikwik IPO?
Yeah, thank you, AS. So, guys, now we'll cover the Mobikwik IPO. So, just building upon what AS just told us about BNPL. So, of course, number one, Mobikwik is a fintech company and it is one of the largest mobile wallets and BNPL players in India. Uh, at the same time, the company is into cross-selling of products such as insurance, mutual fund investments, and digital gold. So the company commenced operations in 2009, and it started with Mobikwik Wallet as the main product, and then of course it evolved to a lot of other use cases. So as of FY21, the company had 10 crore registered users and around 34 lakh online and offline merchants. So the company, just breaking this company down into three simple segments. So the company, of course, number one is buy now, pay later. Number two is the consumer payments, which is the Mobikwik wallet, wherein we'll talk about it later. And number three is the payment gateway, which is called Zack Pay. So in BNPL, they have two main products. Okay, and of course, when we talk about buy now pay later, it's just a fancy term for lending to the higher risk profiles, with the risk not being priced in. Like like just as said, the rules and the dressing can be done there. So product number one in BNPL is called Mobikwik Zip. It is the flagship product of Mobikwik. So this is an interest-free product wherein credit limits of rupees 500 to rupees 30,000 is granted to the user's Mobikwik wallet. It is a one-tap activation, and 15-day cycles are followed. So as of FY21, the company says that 2 crore users have been pre-approved for Mobikwik Zip, and the repeat rate of Mobikwik Zip users was around 80%. So I'll repeat this. The number one product has no interest attached to it. It is virtually a free product if you remove the processing fees and etc. So product number two in BNPL, it is called Zip EMI. So what really happens here is that the customers who have a good repayment history are approved for this product. So it is an interest bearing product, and it is available in options of 6, 12, and 18-month EMIs. So what really happens is that the BNPL product number one directs users towards product number two. So it's all about building a habit, right? So you have consumers who are borrowing less, and then they eventually move on to borrowing higher amounts, and that is how Mobikwik is still directing them. Number two, it's very simple. It is a Mobikwik wallet. It is a mobile payments app wherein users can just load money and they can use that wallet to pay the bills or at checkout places, right? Online and offline merchants both. Number three is a payment gateway. It is a payment gateway aggregator that offers end-to-end payment processing solutions, and of course, you can again access a host of payment modes over here. UPI, credit card, debit card, etc. When I talk about cross-selling, the company had acquired a company called Clear Funds. It was an online mutual fund platform, and they acquired the company in 2018. The company has partnered with around 36 asset management companies, and the AUM of this segment is around 400 crores. So the AUM in FY19 was 165 crores. So they have virtually doubled in 3 years, in 2 years basically. When I talk about the user acquisition, the company says that they have acquired 77% of the users without any cost. And when I talk about merchants, the company says that they have around 34 lakh merchants who accept payments through the Mobikwik wallet. They say that they have around 33 lakh physical stores and close to a lakh online merchants. So when I talk about the offer details, the company is expected to raise close to 1900 crores. I mean, it's quite a different issue because all of the tech IPOs that we saw were majorly offer for sale. But over here, we see that for Mobikwik, the fresh issue component is 1500 crores and the offer for sale is just 400 crores. So, of course, when we speak about BNPL, we know that, okay, so it's quite a big opportunity. Fintech is a word that is used a lot. In fact, it is a word that is misused a lot, I would say. So we saw the advantages, we saw the scale for BNPL for Mobikwik, right? So what are the risks? So number one is of course the space is crowded. There's a lot of competition. If I talk about the main competitors of BNPL, these are of course banks. These are large financial institutions that are backed by low cost deposits which are insured. At the same time, there is very low entry barrier for BNPL. At the same time, the cost of switching to another BNPL offering is very low. Users can just keep shifting around from one BNPL provider to another BNPL provider. Now, of course, the main thing is the valuation. So, of course, the EPS, the book value, and everything else is negative for the company. And of course, when we talk about fintech and in this bull market, I'm really sure that no one really cares about valuations. But we have a few figures that give us a reference point. So on October 12th, the company's employees did a secondary sale of shares under the ESOP plan, and it was done at a $1 billion valuation. So so at $1 billion valuation, the company's per share price comes up to around 1400 rupees. And the company has said that they're targeting a IPO valuation of 1.5 to 1.7 billion dollars. So in relation to that $1 billion ESOP share price, at $1.5 billion, the per share price comes up to 2,000 rupees, and at $1.7 billion, the price comes up to 2,300 rupees. And currently, the share trades at close to 1,400 rupees in the unlisted markets. Of course, the main thing with Mobikwik is that it faces a lot of competition. So we just spoke about three of the segments, right? Number one is of course the BNPL, number two is the wallet, and number three is the payment gateway. So when I talk about the BNPL segment, of course there are a lot of players like AS said. Of course, then you have Lazy Pay, you have Zest, you have Capital Float. Then of course Pine Labs is one of the biggest ones. When I talk about the Mobikwik wallet, of course the number one competitor is Paytm. Then you have PhonePe, and then you have Google Pay. When I talk about payment gateways, there are a lot of them, starting with, of course, Razorpay, Cashfree, PayU, amongst a host of others. So, no one really knows that who's going to be the winner in this. Underwriting matters a lot. Competitive intensity also matters a lot. It has to be seen how the space pans out. Like I said, fintech is a word that is misused a lot. So definitely, we would like to wait out and see how the competitive intensity plays out. And that's about it. So we'll open it up for question and answer, guys. If you want to ask a question, you can just request yourself as a speaker. Okay, we have a few questions. Kunj, your question, please. Kunj, we have unmuted you. Your question, please.